New year, same old problem plaguing the housing market. That's high interest rates. The average 30-year fixed up to 6.48% from 6.42%, according to Freddie Mac. Now, while that's down from the peak north of 7%, still more than double the rates home buyers paid 1 year ago. Zillow senior economist Nicole Bachaud here with part of our real estate report brought to you by Intuit TurboTax. Nice to see you, Nicole. So where do you think these mortgage rates settle in, flatten out this year? And will it be enough to really unfreeze the housing market?
While we're seeing inflation coming down a bit, that's going to help put some downward pressure on mortgage rates. But the Fed just yesterday announced that they have no intention of really slowing down rate hikes in general. So we're likely going to see mortgage rates staying, well above those 3% that we saw in 2021, somewhere probably between, the 6.5% is likely where we're going to sit for the rest of this year, without any other, major factors influencing rates.
So, Nicole, what does that mean then for the outlook of the real estate market and what we'll likely see play out over the next 12 months?
So when we're looking at mortgage rates being so far elevated from where they were in 2021, what that really translates to is an affordability challenge for the majority of home buyers and home sellers alike, right? So we have people who are trying to get into housing. Homes are now a lot more expensive than they were pre-pandemic. And you're coupled with these really high rates that have, yes, come down from those 7% peaks, but we're still seeing mortgage affordability taking a big hit in a lot of especially expensive markets across the country. That's going to put a big challenge on buyers to be able to get over that hurdle of qualifying for a mortgage once they're able to find a home that they want to buy.
Yeah, in particular, those first-time home buyers that have really been priced out of markets. You say the Midwest is the most important market as we move forward. Why? And are there specific cities and towns inside that you expect to grow this year?
So when we look at the Midwest, what we see happening right now is, most of those markets we're looking through Ohio, Kansas, Indianapolis, through Illinois. A lot of those markets are typically way more affordable and lower cost than your typical, hot markets that we think of that we saw throughout the pandemic of, Florida and the Sun Belt, throughout Texas. A lot of those markets that were really hot just got way too expensive and unaffordable. Now we see affordability kind of just thriving in these Midwest markets. And that's what's going to draw a lot of buyers to these areas, particularly when we look at remote work and the impact that remote work is going to give to, folks being able to live further away from their workplace. Maybe looking at the Midwest might be an option for a lot of people who want to get into homeownership but are priced out in their own areas. So that's likely where we're going to see a lot of that movement happening. Buyers who live in these areas who are able to afford, given the lower cost, or buyers from elsewhere kind of taking advantage of the lower prices and the relative affordability of the Midwest region.
All right, Nicole, so that's the buyer side of things. Let's talk about the rental market because that has been a huge story here. The data that you sent over saying that the typical rent in the U.S. still stands just above $2,000, up 8% from the levels that we were at just a year ago. Do you think rents have peaked, and what does that landscape look like in the coming months?
So rent growth has definitely peaked earlier this year. About February, March timeframe is when we really saw the peak of rent price growth, and that started to slow down pretty significantly. But like you said, we're still over 8% growth from last year. That's a big jump when somebody's going to re-sign their lease. When you're, a year up and you're going to re-sign and now you're expected to fork over hundreds of dollars more a month for the exact same unit. That's a big punch to renter budgets that are hit with inflationary pressures from other segments of the economy as well. So this is going to be a big challenge for many renters to kind of face the prices that we've seen. We are seeing rents growth slow down to the point where, a lot of markets are seeing plateauing rent prices, the past couple of months, especially as we're in this kind of slower winter season now. That will be helpful for, renters who are looking to re-sign a lease now, maybe have a little bit more opportunity and options than if you're in the, kind of peak summer season that we typically see. So we're expecting rents to kind of, continue on this cooling path, especially as multifamily housing starts and permits have been up. We're going to see more construction happening in the rental market overall, and that will help to, put less pressure on vacancy rates. That will help to lower prices and give more opportunities for renters to find somewhere to live.
Is there more inventory coming on? That's been a big issue for years.
So yeah, when we're talking about the rental market, we will likely see an increase in especially multifamily buildings, these large apartment buildings, because that's where we're seeing builders kind of shifting their focus to. When we look at the for sale side of the market, we see inventory being the major reason why we're seeing, prices staying as elevated as they are. We just don't have enough homes. We're not seeing construction activity anywhere near the level it should be in order to kind of dig us out of the construction deficit we were in following the Great Recession. We had really good construction numbers in 2021 and the beginning of 2022, but that started to slow way down as prices and especially as interest rates went up and kind of took demand out of the pool for, who is buying new construction homes. We will likely see existing homeowners being more willing to sell their homes throughout 2023, now that we kind of have this stabilization and plateauing of prices and hopefully rates as well, which will just give a little bit more certainty and clarity of what, to expect from the housing market moving forward after coming off of such a tumultuous year that we had in 2022 that kind of pushed a lot of sellers to the point of saying, I don't want to sell if I have a 3% rate and I don't know what prices are going to do. But now that we're in a little bit more of a consistent market, we'll likely see more sellers kind of taking that action throughout 2023, and inventory will increase as a result.
Senior economist from Zillow, Nicole Bachaud, good to see you. Thank you.